Hey, what's going on, guys? It's Marcos. So I think we gotta face it by now. Looks like the world is coming to an end. Okay, maybe I'm just joking, being a little bit over dramatic, but maybe not really. The stock market is just taking a big dump right now. The economy is not looking so great. And if you haven't heard by now, there's a Chinese company out there that is just simply crumbing down, and it seems like it wants to be bringing the whole financial world along with it. And if you guess who that was, that's Evergrande. I think everybody's heard about it by now this week. Probably nobody knew what it was or who they were or anything last week, but here we are right now. Evergrande seems like it's the story of the week, and today we're going to be talking about who they are, what is it that they do, and really their importance in the world's economy. Obviously, the Chinese economy, it is a Chinese company, but they might not be the only reason why the stock market, the crypto market, and just basically every other financial market in the world right now is just simply bleeding deep into the red this week. And things might not be getting anytime better, anytime soon. So with that being said, let's go ahead and talk about Evergrande. And Evergrande is China's second biggest real estate developer. And the company just simply has a huge problem. It has a huge problem of debt to the tune of about $300 billion that they just simply can't pay at this moment. And right now, everybody's expecting them to basically just go belly up. And it's up in the air whether the CCP, that's the Chinese Communist Party, if they are going to come in and save the company, just sort of the same way as, how the United States saved the banks back in 2008 during the recession. But regardless, whether they do that or not, it's simply going to be causing a lot of drama, and it's going to rock the confidence in Chinese investments in the global economy. Not like investors were not already skittish about the Chinese stock market and obviously their crazy government regulations. Diddy, anybody, Alibaba, even games. So anyways, that's another story for another day. Back to Evergrande. They owe $300 billion worth of bonds that they've issued, and right now they have a payment of $83.5 million due on September 23rd. Last time I checked, I think that's 2 days from now. And next week on September 29th, they are also due for another $47.5 million interest payments. And at this moment, nobody's really expecting them to meet those payments. Both bonds will be in default if Evergrande fails to settle the interest within 30 days of these payments. So yeah, now you can see why things are not looking very good right now. So anyways, because really nobody's expecting them to make these payments, hell, not even themselves are expecting them to make these payments, what they're doing is that they are offloading as much real estate as possible in order to pay back their investors, especially those in the wealth management side. And they're talking about giving discounts of about 20 to 25% of the fair market value on these investments. And even their investors don't even want to take these Chinese real estate investments, because if they just simply dump them, then those real estate investments are also going to just decrease in value. So they are sort of in a catch-22. So of course, this company is so big and just has so many arms into the Chinese economy that a lot of people are putting them side by side to Lehman Brothers back in 2008. Because fact of the matter is that real estate makes up about 20% of the Chinese GDP. And Goldman Sachs have said themselves that their assets, Evernote's assets, are equivalent to 2% of the Chinese GDP. So if this company goes down, it's going to be bringing down that economy as well, regardless. Look, the real estate sector is one of the main drivers in the Chinese economy, which employs over 100 million people. And the Chinese have actually said themselves that property development is one of the most important things into their national growth and development of the country. And how they ever now get here? Well, it's honestly just because of that. Because the Chinese government allows these huge developers to really borrow money very cheaply and access to a lot of collateral, to a lot of money with very little collateral themselves. So in the case of Evergrande, they used a lot of these collateral, a lot of this money for outside ventures way outside their core business, which includes, sports, it includes electric vehicles, health, media, music, it includes wealth management, life insurance, and a bunch of other stuff that are way outside of the scope of real estate. So, obviously with Evergrande failing to pay off or any of these notes that they have coming up due, it's going to just simply set off a chain reaction. I mean, just suppliers may go broke and commodity prices might collapse. And eventually, if Evergrande just goes on a fire sale of their real estate holdings, it's going to tank property prices in China, which has already been on a housing bubble since about 2011. So with that being said, this will lead to the obvious case of contagion that everybody is talking about that will spill over to the rest of the world, including Europe, including Australia, and obviously coming over to us in the United States as well. But one of the biggest questions is whether or not the Chinese government is going to intervene, if at all. Obviously, we just went back that, the United States did intervene when all the banks were failing back in 2008. But China, honestly, they've been, they operate in a different way. They've been growingly concerned about how these property values have been going up so crazy, but they're not really that ready to just bail out Evergrande if they do go belly up. They just feel like at this moment, unless unless it really goes bad for the other property developers and goes bad for the other parts in the Chinese economy, they might just let them crumble. And of course, if they do go belly up, it's going to rock the world's market in a bad way because investors are going to feel a little bit uneasy about what will happen in China after this whole debacle. But on top of all this, our economy is also dealing with its own set of problems. The Federal Reserve is set to meet this Wednesday with the biggest focus being the bond taper. And obviously, a lot of you guys know that since last year, the Federal Reserve has been buying upwards of $80 billion worth of bonds and mortgage-backed securities in order to keep rates at near zero and keep this whole show afloat. So Jay Powell's printing machine has just been going non-stop since March of 2020, since the start of the pandemic, and they're looking to scale back on this. But it's not really known if they are going to start tapering back now or if they should wait until next year to start trimming all those bond purchases. But regardless of how Jay Powell decides to do that, and the Federal Reserve is still going to cause a lot of turmoil in the markets because Wall Street just likes doing that. And if we go back to 2013, when the Fed decided to trim on quantitative easing, QE, after the 2008 recession, they just threw one big hissy fit into what's known as the taper tantrum. All right, there you go. That's basically the end of the video. Oh wait, I just forgot one thing, and now it's a debt ceiling because issues about this debt ceiling are starting to sound up once again, with Janet Yellen saying that the US could run out of money to pay its bills in October if Congress doesn't raise the debt ceiling. And even though everyone is expecting politicians to keep playing mind games with one another until the very end, this in fact is going to keep the markets acting a little bit jittery. But look, it goes without saying that if the US defaults on its debt, well, that's not only going to shut down the government, but it's not going to be very good for the world's economy. And obviously, if that happens, the world's economy will just enter into a huge recession. So I guess we're just gonna go ahead and sit back and watch all these politicians play back and forth and see what they do about this debt ceiling. Everybody's expectation is that they'll come down to some agreement at the top of the hour. But anyways, with that being said, what can you do right now? What can you do to make some money in these crazy times, and how we can all get ahead in all this? Obviously, one of the biggest things that a lot of people think about is, well, just buying the dip. And no, I'm not talking about that dip, but I'm talking about this dip. Now, this could be one of the good opportunities because if you felt like valuations were just extremely high and ridiculous, and in fact, some of them really were, this could be just a really good time to come in at a huge discounted price to start buying different stocks, different cryptos, different investments, whether you're into any of it or you're into something else, like even real estate. So definitely this is a good opportunity to start just looking at different investments that you might have been eyeing in the past. And if you have some cash in the silence just waiting to be getting into the game, this could be a really good time because in the last quarter of the year, things get really, really good. So at the end of the day, guys, even though things are not looking very good right now at this time in September, listen, just know that investing is a long-term thing unless you're just into YOLOing your life savings into deep out of the money AMC calls with 1 week to expiration. But once again, this could be a really good time to start thinking once again into what kind of stocks or what kind of crypto assets or even what kind of other investments are making sense that you know are good long-term plays and you can just get them in a pretty good discounted price. Look, just at the end of the day, guys, it's okay for markets to take a breather, to pull back and even correct in some cases. It's not the first time that the market just tanks like it has this week. It's happened before, it will happen again. And right now we're probably at the same levels pre-COVID, And if you guys have seen the run up of the stock market and even a lot of other asset classes out there, this could be a really huge opportunity once this market goes right back again, which at the end of the day, it always sort of does. All right, so that's all I got for you guys right now. Thank you so much for watching the video. Subscribe to the channel if you haven't. Let me know what you think about it and what do you think about this whole Evergrande thing and what do you think is going to happen. Love to hear from you. Let me know. Put it in the comment box below. And once again, I will see you in the next video. Goodbye for now.